Good afternoon, ladies and gentlemen in attendance. My name is Jessica Bridges, and today I have the pleasure of presenting the May financial statements for Gemstar Productions. I would like to begin with discussing the profit and loss statement for this month. This will be our first month in operations, and as you can see by the slide, profits have been made and numbers are expected to increase. This increase will be reflected in next month's financial analysis. This month, the company was able to participate in a total of 4 events, which generated an income of $11,400. This revenue was calculated using 2 weeks of generated income. The total amount of expenses made by the company for this month were in the amount of $6,333 and 54 cents. This may seem high initially. However, please keep in mind that a good portion of the expenses seen are paid monthly by the company. And finally, our net income for the month of May resulted in a total net income of $5,066 and 46 cents. On this next slide, you can see the current profit ratio for the company calculated for the month of May. The income generated of $5,066.46 was divided by the sales revenue of $11,400 for the month, resulting in a profit ratio of 44%. This ratio, as stated in the previous slide, was calculated by using only the first 2 weeks of generated income, which also shows the company's potential to earn a higher income for the following month. I have attached a more detailed profit and loss sheet, which also includes the monthly budget for the company and shows our projections for the month of June. At the moment, the existing gaps that were not taken into consideration for our income projections were for the company's utility expenses and vehicle expenses, as these can fluctuate based off of our monthly usage. The upcoming events that are scheduled will generate an income of $45,000 minimum, but will also require equipment rental, as we currently do not have the equipment needed for the events in inventory. The current utility expense was also calculated based off of 2 weeks of usage. This expense will increase during a full month of operations. Current projections show that the company will be close to 100% of our projected budget by the end of February as long as no unforeseen expenses arise. Our current statement of cash flows shows how busy the business has been in just the first 2 weeks of operations. During these past 2 weeks, we have made a deposit with one of our vendors for an event we will be hosting next month, and also have purchased necessary supplies, as well as have used our lines of credit, which have resulted in an amount of $1,420 for our accounts payable department. The total net cash from our operations is $9,219.79. A vehicle was purchased to facilitate the delivery of necessary equipment to and from events and should be considered an asset. Keep in mind that although the vehicle initially may appear to be an expense, the company retains ownership that can later be sold or liquidated if needed. The company also participated this month in some investments. This resulted in a deficit initially of negative $13,953.12 from our net cash from investment. An initial bank loan was needed in order to cover the startup cost of the company, and common stock shares were sold to generate a net income amount of $60,000 for the company's financing activities. The cash that we generated at the end of the period was $50,700. I have attached the official report from our QuickBooks account showing the same content shared on the previous slide. On this next slide, I have shared the company's balance sheet, and as you can tell by the slides, our liabilities and assets are evenly balanced. Our total assets amount to $66,486. The company's current assets can be found in the form of a vehicle or cash. Our current liabilities amount to $41,420, and the company's current equity stands at $25,066.46, giving the company an amount of $66,486 in total liabilities and equity. If we take the total amount of our total assets, which is $66,486, and divide it by our current liabilities of $41,420, we are able to obtain our current ratio of profit, which is 1.6%, and is common among startup companies to obtain the first month of operations. The company currently expects to continue to expand and increase revenue, starting with next month's events, and continuing throughout the year, which will increase the percent of our current ratio as well. Now that we've discussed the financial analysis for the month of May, I would like to discuss the implementation of internal controls and procedures to minimize and reduce potential fraud or accounting errors that could occur within the company. As you all know, the company recently experienced an unethical behavior by an employee who was found to be mishandling the company's financial accounts. This employee has since been relieved of her duty and is no longer employed by the company. However, procedures need to be implemented to ensure that this is a one-time occurrence. I would like to discuss 5 internal controls that I believe can assist Gemstar with minimizing unethical behavior or errors in our accounting department. I would first like to start off with accounts reconciliation. Reconciliation is the process of comparing the balances in a company's accounting records for a cash account to the corresponding information on a bank statement. This essentially means running monthly bank and account reconciliations and comparing those numbers to the ones seen on the company's bank statement. This will ensure that no unauthorized transactions are occurring without the CEO's acknowledgement or the main accountant's. The second internal control that I would like to implement is financial statements. Financial statements are written records that convey the business's activity and the financial performance of the company. These documents can be audited by government agencies and accountants to ensure accuracy in the company's financials or for investing purposes. Financial statements such as the profit and loss report, balance sheet, and cash flow statements will be run monthly and given to the company's CEO for approval. I will not be considered valid nor accurate until confirmed by the main accountant or a person of supervisory level. The third internal control that I would like to implement is accounting standards. Accounting standards are a common set of values, standards, or procedures that divide the company's financial accounting practices and procedures. The implementation of accounting standards will ensure accuracy and that each employee is following the same protocol. The third internal control that I would like to implement is accounting standards. Accounting standards are a common set of values, standards, or procedures that define the company's financial accounting practices and procedures. The implementation of accounting standards will ensure accuracy and that each employee is following the same protocol. Separation of duty is the fourth internal control that I will be suggesting today. This fourth internal control is defined as the practice of assigning tasks to more than one person in order to prevent error or fraud. Ensuring that only qualified individuals with the proper training or certifications access the company's financial data is key to maintaining proper security and diminishing the opportunity for theft or fraud. Gemstar plans on implementing this control by restricting access to company assets and accounts to only those with the proper certifications or company training. Information security refers to the process and methodologies which are designed to protect print, electronic, and any other form of confidential, private, and sensitive information or data from unauthorized access, use or misuse, and destruction, modification, or disruption of company property. Gemstar plans on implementing this internal control by providing employees with username and passwords, restricting sensitive information to higher management and accountants, and implementing security features such as the shredding of sensitive or confidential paperwork. Monthly backup of the accounting system and yearly audits of current employees will ensure that only currently working employees have access to company information. These internal controls will ensure the safety and security and prevent events such as the previous one from ever occurring again.